Good morning, everybody. Welcome to today's midweek update. We've got a lot to talk about, so let's just jump right into things. Market has bounced so far this week. We're taking a look at the S&P 500 right here, and it bounced on cue, almost where you would expect it to bounce, and not just because we have the S&P 500 here and bouncing. This is Monday, Tuesday, and today is Wednesday. It has a lot more to do with some of the other indexes here. Let's switch this up and take a look at. You could use the Qs as a proxy. Qs bouncing as well. Here's IWM bouncing as well. And why here? Why these levels? For a few different reasons that we want to be aware of. So let me walk you through those. The first reason, I actually spoke about this with our members yesterday, has to do with multi-time frame analysis. Multi-time frame analysis. Are you guys familiar with multi-time frame analysis? Type into the chat. Let me know if you're familiar with it or not. I'll briefly explain it for everybody that is not quite familiar with multi-time frame analysis yet. What multi-time frame analysis is that you want to see price action not just working on one time frame. You want to see it working across time frames. So if we pop over here to say I don't know, weekly chart, let's just mark this level right here, right? And let's make this a little thicker, right? Let's come over here and make that line nice and thick. So what if we pop over to a weekly chart? Well, if you take a look to the left, you start to see some levels of interest, right? And that's happening after price has already fallen significantly. So you would expect a bounce. Take a look at a monthly time frame. You're approaching the February lows. But it wasn't just happening on one index. You had this happening on multiple indexes. If we go back over to SPY, right? Start on the daily. Draw the same kind of line right down here. This one also happens to have another important line and confluence where you might say, you know what? Taking a look at this chart, looks like it might bounce. Can you guys point it out? Do you see what it is? My cursor happens to be sitting right by it. It's that thin orange line. That happens to be the 100-day exponential moving average. Now, you might be asking yourself, Mike, well, why would you put that on your chart? You have all these different moving averages. Why? Well, what's the significance? The significance of them is the 100-day is an intermediate to long-term level of potential support. And price does, on occasion, get supported in and around there, particularly on the indexes. So we want to be aware of it. It's like typically when you're reading these historical books, like O'Neill's book, that's one of my favorites. That's the one that I studied first. Then you study some of John Boyke's work. I actually spoke about all these books on Friday's show, the Trader's Mind Chat show. If you're not already tuning into that one, go tune into that one as well. I broadcast them everywhere, so just make sure that your alerts are all turned on wherever you happen to be watching this show. We also take the recordings and upload them to Spotify. Anyhow, so where was I? Oh yeah, so with the 100-day exponential moving average, it's this intermediate term level of support that the others didn't really go too deep into. However, it kind of makes sense, right? It's like the halfway point between the 50-day moving average and the 200-day. So we want to have something sandwiched in between. This is a good one here. But here's another thing with the S&P, right? Zoom out to a weekly time frame. And last week's low, it's also catching. Zoom out a bit more, zoom out a bit more. Right? It looks like you have an air pocket here. If we're taking a look at this on, I think it was a little bit different on the S&P 500. No, I was thinking about another one. Let's take a look at the Qs. I think the Qs were slightly different than the actual NASDAQ. Yeah, that's right. So if we come over to this, excuse me for 1 second while I adjust this chart here. All right, so we've got this line here, right? So this is the NASDAQ that we're looking at now. The NASDAQ dropped too. Sharp drop last week. Sharp drop on Friday. It looks like the market's going to implode. You take a look to the left, and what do you see? Right? Take a look at where the cursor is and take a look at this horizontal line. It draws a line right over to this section over here. There's a support area. So price is either going to do one or two things at this point. It's either going to continue to slice through, or it's going to find a spot to rebound. And when prices sold off so hard for so long, so swiftly, and you get to a floor, you're more likely to bounce. And so that's why I started to take a look around, right? Because, well, one thing that you want to be aware of too, not all bounces are necessarily created equal. We do want to be prepared for a potential bounce, right? So let's say that you're somebody that's been shorting the market and you're like, oh, you know what? I think that the market's going to fall a lot further. Well, it very well may. At the same time, if the market is getting close to a point where a rally back in your face is likely, wouldn't you want to take some profits? Wouldn't you want to cover a little bit? I would. I did. So let's take a look at this again and take a look at some of the other time frames on here. Take a look at the weekly time frame. The weekly time frame coming right into this prior resistance zone, a short one, but it's still a prior resistance zone. How about a monthly? On the monthly time frame, you rallied, you just got back into new highs and you pulled back. You know what this reminds me of? Kind of reminds me a little bit of what we saw with Bitcoin. Now, let's bring up Bitcoin real quick. We'll take a look at Tesla in just a moment as well. But here's Bitcoin. Right? Bitcoin looks like it's just chopping around, not really going anywhere. But what happened with Bitcoin? What happened with Bitcoin? Bitcoin, very similar to what we saw just now with the NASDAQ. It got up to prior resistance. It poked through fairly swiftly, and now it's finding time to consolidate. So when price has these big moves, we have to expect and anticipate a natural reaction. And when we're taking a look at the market, the general indexes, right? Your SPY, your QQQ, when you have such a strong move like this, you have to anticipate that it's going to turn around sometime. And it's not just throwing a dart blindfolded. There's lots of ways to tell. Here are some of my favorite ways to tell. And if for those of you that are already in the membership, I know a lot of you are tuning in as well for the midweek update. I appreciate you guys being here too. This is one of the things that we talk about all the time. We want to see not just what's happening on the indexes. We want to pop out and take a look at, well, what stocks are actually setting up, right? And what are the quality of these kinds of setups, right? So if I take a moment to reset my chart here, and let's put this back to a daily time frame, and we'll get this over here to a monthly. That's set on the week weekly. No, that needs to be set on the weekly. We've got the 30-minute over here. If we come through this and start to scroll through some of these charts, right? Let's adjust this back, turn that off, see if we could zoom in, and then am I still able to switch? Yeah, great. So coming into today, there were actually some halfway decent setups. This one here, MUX, still setting up, right? You can see how price bounced off the 21-day exponential moving average yesterday. It did that on semi-decent volume, closed near the top of its range. It's continuing to consolidate. Heading into tomorrow, if this thing can follow through, the setup actually looks a little bit better to me. Here's another one that we had on the radar. Stu, our other coach inside the Mara Elite program, he highlighted these. So thank you to Stu. By the way, Stu is putting on a Mara, well, what are we calling this? A Mara midweek mastery session right after the close. So we're very much looking forward to that. Got a question that came in from YM. What platform is that? Are you talking about the charting platform that I'm using? If you're talking about the charts, this is TradingView. And I have a bunch of different indicators on here. We could talk about that later on. But the charting platform is TradingView, if that's the question. Yes, good. And TradingView is my favorite charting platform, by the way. The reason why they just have, they let you customize as much as you could dream you could probably do with this. Not just changing the colors and fonts and text and indicators and all that. You can build your own. I had a custom built indicator to highlight danger signals. Some of the danger signals that actually all the danger signals that I've outlined in my book, The Trading Mind Wheel, all that is built into an indicator, and I thought that was pretty cool. Let's see, well, what other charts are in here, right? TPC, this one went nowhere there. So I like to, every day when I'm doing my daily trading routine, I would like to not just run screens and see, well, what am I going to buy, right? And try to lump everything all together. And let me take the charts off, right? So that way, because this is important for you guys. When you're running your daily routine, you don't want to just have a separate buy list, and that's the only thing that you're going to worry about for your routine. Oh, there's nothing to buy. Just take this, toss it, right? What you want to do is have a list of everything that's consolidating, right? Everything that's consolidating that fits your predetermined parameters, whatever they happen to be. I run several fundamental screens and I build a universe list. And then from there, I take that universe and I see what is consolidating right now, whether it's a good setup or a bad setup. Once I have that list of just everything that's consolidating, I'm able to see how many great setups are there, how many so-so setups are there, how many are complete trash that I wouldn't touch with a 10-foot pole. That gives me a very, very good feel of where the market is at right now. Because if we have high quality setups, the high quality ones are far more likely to work. They provide the best reward to risk. They have momentum coming into them. They have selling pressure that's already dried up. If I find a lot of those, then that's telling me something about the market. When I take a look at what we've got here, right, all these different setups, there's a lot of flaws in them. And so just by doing some screening and looking through a list of, well, here are the stocks that are setting up or consolidating, how many of them are actually good? Not that many. That gives me a very good feel of the market. And here's a very important point about that. I'm getting a feel of the market by looking at the stocks. I'm not tuning into the news. I'm not looking at CNN. I'm not looking at Fox. I'm not looking at NBC. I love Investors Business Daily. That I learned from them. I'm not going to them to read the paper. I'm doing what they taught, which was take a look at the market. Pretend that if you're going to study fish, go look at a fish bowl, right? Don't just sit there and read books and other things out like that. That's nice. You should have a basis. But what you want is to observe what's in front of you and let that do the speaking. Learn to read the language of the market, and then you're going to be set. What's the language of the market that I'm reading right now? Most of these setups, uh, they're getting there, but they're not high quality yet. So when I take a look at SPY, right, to bring this one back up, let's zoom in a little bit on this. Right, so when I'm looking at this, I'm not saying, oh, you know what, I should be getting in heavy over here because it's time to rally. There might be a couple of good trades in here, but they're going to be quick and they're not going to be a lot. Like there's maybe a base hit in here, a base hit in there, and now you could even see that today we got back up to that red line and that purple line. That's the 50-day moving average. That's the 21-day exponential moving average. And what's happening so far? We're hitting our head, right? The SPY, S&P 500, it's hitting its head. And there's not a whole lot of stocks that were setting up from yesterday afternoon coming into today that would really push it through. So now we can prepare. Now we can better manage. And that's a lot of what we're trying to do. So much of trading and trading well and making money consistently is understanding the market environment that you're in. And here's another point, and YM. I do see your question about Forex, and we'll get to it in a second. But well, when we're trying to have a system that is going to be consistent and where we're going to be consistent in the market, being consistent in the market does not mean that you are making the same amount of money every single week, every single month, period. Well, what it means is that you're able to consistently execute your system. So I live in New York. We have all 4 seasons and they all last roughly about the same period of time. That doesn't mean that I should be planting seeds in January, February, March, April, May, every single month. Right? If I'm doing that, then I'm wasting time, I'm wasting money, I'm wasting effort. There's a time to plant. There's a time to grow. There's a time to harvest, and there's a time to sit and wait. That's what the market is. That's what being consistent is. So if you think that you're going to get a steady paycheck from trading, that's not really how it works. And I don't know anyone that really has pulled the steady paycheck, right? Perhaps there's some people that you might point to on social media that say, "Oh yeah, I've done this." Have I personally met any of them? Have I personally spoken to any of them? No, I have not. And I've been trading for 25 years now, and I know some of the best in the business. Um, let's go to the questions. We've got about 10 minutes left. Let's see. Question from YM over on YouTube. Are you trading Forex? No, I'm not trading Forex. I trade stocks and I trade crypto. I haven't traded Forex yet, but a couple of my friends do trade Forex, and I'll gladly name drop them. So if you want to check out Jason Greystone and Akil Stokes, both of them are fantastic. They run a service called Tier 1 Trading. You might also want to check out Austin Silver. I believe his service is called ASFX. Fantastic guy, great coach, puts out lots of great information all over Instagram and YouTube and all the social medias. Let's see, who else? Rolf, who runs TradeSociety.com. He also has a journal called Edgewonk. Great software, also trades Forex. So you have several Forex traders that you can go check out. I recommend all of them. I've interviewed them too. So if you're on my YouTube and you want to check out those interviews, just type in any of those names and they'll come right up. Let's see. Well, what other questions do we have here? Just going to pop over to Instagram. Let's see here. Instagram makes you scroll for a mile because every time that there's a comment, whenever somebody joins on Instagram, it treats it as a comment for some reason. They've got to fix that. Christopher Trey said that something is headed to 460. I'm not sure what you're referring to there, but yeah, if you're still here, if you're still watching, Christopher, type into the chat and let me know what you were referring to that was headed to 460. Let's see, YM asks, I'm trading with my own EA. You can check it out. Got signal on MQ15. By the way, I'm living off a Forex Green Mower 1. Okay, I don't know what Green Mower 1 means. You could certainly live off of trading. Right? I'm not suggesting that you can't live off of trading. Well, what I'm suggesting is that having a steady paycheck, right? Because how do most people approach the market? Most people approach the market thinking that I'm going to be consistent straight off the bat and I'm going to be able to pull X amount of money from the market every single day, every single week. Not how it works. You could over time get to a point where you could do that. Now, how do you do that, right? Am I talking out of both sides of my mouth here? The way that you're able to pay yourself consistently from the market is to first grow the seeds, right? So think about it. Think about trading like this. Picture that you planted an apple seed. Right? You planted an apple seed. It's going to take time for that seed to grow. Right? I'm not sure how long it takes for an apple tree to grow, but it's going to take time. As you plant that seed, as you care for it, as you water it, as you give it the time to grow, eventually it's going to grow into a tree. Then you have an apple tree that you could start to eat from consistently. If you're smart, and hopefully everybody listening here, I'm sure you all are, you would take some of the other seeds that have come from the new apples and start to plant those. Then instead of having just one apple tree, then you have 5, then you have 10, then you have an orchard, right? And then you're able to start having a full-time salary from your trading, right? You're able to have your whole apple farm. But to relate it back to trading, you have enough profits to be able to draw a salary from without killing off your tree, without killing off your orchard. So hopefully that makes sense. So can you make a living from the market? Yes, you can. It's not going to be on day one. You have to grow your account first to then be able to pick the fruit without killing the entire plant. Hopefully that makes sense. Other questions? Let's see, from Notebook Trades over on Instagram. Filtering process from market to sectors to stocks, etc. That's exactly what I do. That's exactly what I do. So what I like to do is I will filter the entire market. I'll screen for fundamentals and technicals. I'll screen for the sectors and all that, and I'll build a universe list. Once I have my universe list and I've done that screening of all the potential growth stocks, and I end up with a list of about 400 stocks on that list. That might sound like a lot. There's 10,000 stocks in the market, and I've already filtered it down to 400 in a matter of minutes. Then I go through those, and then I start to look at which ones are in the leading sectors, which ones are in the leading industry groups. of the ones that are in the leading sectors and leading industry groups, which ones are the leaders within that, right? So which one is the leading stock in the chip sector, in the building sector, in whatever sector happens to be leading at the time? And then uh, are those setting up? Are those presenting a way in? And that's part of the process as well. Let's see. We've got time for one or two more questions here. Tesla. We were going to talk about Tesla here. And Tesla, as you can see here, very strong reaction to earnings so far. Right? So Tesla is one that has been in a downtrend for a minute. Right? If we come out to a weekly chart, and let's turn off the pattern recognition because it's getting in the way. Right? So this is a weekly chart of Tesla, and you can see that it's been in a downtrend since July of last year. Steady downtrend, and coming into earnings down here, you may have expected an implosion. But remember what we talked about earlier, multi-time frame analysis. Look to the left. You're starting to get to multi-year lows, 18-month lows almost, right? Well, how long is that from January, right? So what is that? That's a 15-month low. Is it likely to just go straight down after it already dropped 14% last week? Is it more likely to bounce before coming down here? I don't know if Tesla is going to rally from this point or if it's just going to have this brief snapback rally and then roll over. But coming into today was far more likely to bounce than implode. And I want to give a shout out to my buddy Gerard, who came over to my house last week, and we were talking about Tesla. He loves Tesla, and he turned me on to this ETF here called TSLL. Now, this is a 2 times leveraged ETF of Tesla, and the reason why he likes it so much is because it lets him trade Tesla at $6 versus what's Tesla trading at now? 160, right? Something like that. Yeah, 160. So instead of paying 160 per share, you're paying $6 per share. And what he likes to do is he will sell puts that are out of the money, and if he'll sell weeklies out of the money, and if price drops and the stock gets put on him, then he will sell calls on the way up here. It's a interesting strategy. I don't recommend doing it all the time, but coming into earnings, I felt that was a special case. So I'm like, you know what? Let me try this here, right? Because yesterday, let's come back to a daily chart. Yesterday, price was already way down here, right? And we had already said that it was near a support level. So are we more likely to get a complete implosion of Tesla? Tesla was down. This one was down about 20% last week. That's about the most that it's ever been down, this ETF. So is it more likely to drop down to 4 or 3 from here, or is it more likely to have a rally? Well, I said, you know what? Let me try this out. So I sold the $5 put yesterday, and so far that's rallied, and the put expires on Friday, so we've got 2 days for that to go. um, unless if Tesla uh, implodes 25%, then uh, that sale would have made money. But if you do get the stock put on you and you continue to have it, then his idea is you sell calls after getting the stock put on you. It's an interesting idea. An interesting idea. Well, what do you guys think about that one? One person in here says, "Your chat is so confusing." Yeah, that it's not a strategy for everybody. That one certainly is not. But let me know if there's any other questions. One thing that I would recommend, if you guys haven't done so already, is that you hop on over to the newsletter, right? Right there, if you're watching this. Join the newsletter over at marwealth.com/newsletter. We put out a free daily newsletter, and there's all sorts of education in there. It's not long, it's something that you could read in about a minute each day. And there's lots of great stuff in there. So go hop on to the newsletter, marwealth.com/newsletter. If you've watched all this, if you sat through the whole thing and you're not already on the newsletter, then I don't know what to say to that. But let's see. Is there anything else? I'll wrap things up. All righty. So, all right. Hopefully you found this midweek update helpful. I'd love to hear your feedback. It helps me to improve this show, make it even more valuable for you. So please keep sending me your feedback. I read all the comments on all the platforms. So wherever you happen to be watching, drop comments and let me know what you thought, what you liked, what you disliked, what you'd like to see next time. Until then, take care. Much love. Peace out, everybody.